investing $500 every month into Vanguard S&P 500 ETF, ticker VOO, otherwise known as VOO. Investing $500 every single month into VOO. What would that look like? Can you imagine that? What would that grow to after some time? 5, 10, 15, 20, 25, 30 years or more. That's what we're looking at in today's episode of the MD Investor. But before we get into it, remember, I'm not a financial advisor, just a regular guy on YouTube sharing my passion for financial freedom. Everything I say is for educational purposes only. Do your own due diligence. Without further ado, let's jump into my computer. So we can't invest directly into the S&P 500 index, but what we can do is invest in an investment such as an ETF that tracks that index. So here we are on the Vanguard website. Ticker VOO is Vanguard S&P 500 ETF that tracks the S&P 500 index, right? Which is the 500 biggest companies in the US, right? And that's how you can quickly get exposure. Let's review. VOO is Vanguard's ETF that tracks the S&P 500 index, right? It's management style index. It tracks the S&P 500. Okay, the domestic class, the asset class is domestic general stocks. All the stocks are U.S. based companies. The expense ratio is 0.03, which means to see how much you would pay for every $10,000, you would move the decimal place 4 places to the right. So 1, 2, 3, 4. It'd be 300, and that's in cents. So it'd be 300 cents or $3 for every $10,000 invested. It'd be $3 for every $10,000 invested, which is very affordable. Okay, each share price now is about $477. The year-to-date return since January for the first almost 3 months is about 9.73%. So the year-to-date return is about 9.73%. Here it tells you it invests in stocks in the S&P 500 index, representing 500 of the largest U.S. companies. Let's look at the return. VOO over the last year returned about 30%. For a great year. The 3-year return, 11.86%. 5-year return, 14.72%. And the 10-year return is about 12.66%. Since inception, since 2010, September 2010, it's been returning 14.27%. So great return. For the 10-year return, we have about 12%. But over the last 100 years, the S&P 500 has returned about 9.8, close to 10%. So we'll use 10% as our average return. Okay? Now, let's look at the compound interest calculator. So here we are on my computer, and we're looking at investing $500. That's $500 every single month into Vanguard S&P 500 ETF, ticker symbol VOO. So after 5 years, we would have $38,000, right? And that's investing $500 a month, right? That is a bill, right? That's a car payment. But we are focused and we are being very intentional and deliberate, okay? So $38,000 after 5 years. 30,000 of it is our principal and 8,000 is our gain. Now let's move on to 10 years. 10 years later, our total value is $102,000. We have $60,000 of principal and $42,000 of gain, right? And we are just beginning, right? Let's look at 15 years after starting this portfolio, investing into VOO. $500 every month. At 15 years, we have $207,000, which is great. We have invested $90,000, and our gain has been $170,000. Notice our gain is now more than what we have put in, right? We've like crossed over, but it's been 15 years. Let's look at 20 years later. At 20 years, we have a total value of $379,000. We have put in $120,000, and the gain that we have received is almost $260,000. That's from our capital appreciation, from our dividends that we are reinvesting, right? Because we're looking for the payday down the road. We are reinvesting our dividends, and now a total value of almost $80,000. Let's go to 25 years later. At 25 years later, putting in $500 a month, we have a total value of $663,000. We have contributed $150,000, and our total gain has been $513,000. Right? That is great. Imagine if you had started this investment in a custodial brokerage account for your child. They're 25. Imagine if you started this investment for your children when they were born, and you're doing $500 every month. At age 25, they would have almost $700,000. Let's go to year 30. 30 years later, we have $1.1 million. We have contributed $180,000, but the total gain has been $950,000. Almost $1 million in gain. We've only put in $180,000. It becomes more magical the more you let the money grow and let compound interest do its thing. That's what you're seeing here. You're seeing compound interest do its thing. Let's go to 35 years later. At year 35, we have almost $1.9 million. We have contributed $210,000, and compound interest have given us almost $1.7 million. Let's go to 40 years. At 40 years, we have over $3.1 million, almost $3.2 million. We have contributed $240,000. The total gain is almost $3 million, $2.9 million approximately. At 45 years, we have over $5 million. The portfolio is almost $5.25 million. We have contributed $270,000, and the gain is almost $5 million in gain. Almost $5 million in gain. That's the magic of compound interest, right? You may say that's 45 years, that's a long time. But how many of you out there are around 45 years old and your family didn't hand you a portfolio of over $5 million? The time while you were growing up in high school and college and so on, if they were doing that $500 every month, $500 every month, they could have handed you a portfolio of $5.2 million. Imagine if this was in a Roth IRA. Imagine if you start this for your children, right? Imagine if you started this for your children and you're contributing this, and their portfolio has grown to over $5 million. And if it's in a Roth IRA, it would be tax-free growth. Right? Because building wealth is a marathon, right? One generation does a little, they pass them on to the next generation, so they're not starting from zero, and then they start and they build it, and then they pass it on to the next generation, right? That's how we have to think. We have to have that mentality. And the final slide is after 50 years, we have total value of $8,662,195.40. Almost a $9 million portfolio. We have only contributed $300,000. The total gain is over $8.3 million. That's the power of compound interest, right? So the variables that determine how much our money grows to, the final balance, is going to be how much we're investing, in this case $500. Also, the rate of return that we're getting on investments. We see that down here, 10%, right? Some investments, you get 10%, some you'll get 11, 12%. That's very important rate of return. You have to take into consideration risk as well. But time is one of the major factors. It can take a little and turn it into something much. So again, guys, this is the MD Investor with another video to motivate us, to let us know that even if we weren't born with a silver spoon in our mouth, even if we don't make a huge income, we need knowledge, and we need to take action. You can see you can create wealth with knowledge, but it has to be combined with action. The Bible says faith without works is dead. And so is investing knowledge without action. We know the S&P 500 returns 10%. We know it's a well-diversified portfolio. We know it minimizes our risk because it's spread among 500 of the largest companies. We know it's a way to build wealth. But if we don't take action, open that brokerage account, invest our money, make it automatic, then we'll never see these wonderful growth. Again, guys, the MD Investor with another video to increase our financial IQ so we can break the cycle of generational poverty. Don't forget to subscribe on YouTube. Send the video to people in your circles who need to break the cycle of generational poverty. MD Investor out.